Hello, and welcome to another ProElliottWave.com video analysis for the week of November 10th to the 16th. And this video analysis is for the US markets. It should be a brief one because uh, it's not a major point in the markets. It's a continuing of formations, and please refer to our midweek video analysis, the one that we did prior to this one, and you should be able to find those on the archive pages. And we'll go from here. Here we go. Let's start with some of the legal disclaimers. And this site and service is a video analysis of for educational purposes only. Investing in securities, forex, and futures markets carries a high degree of risk, and you can lose all your investment money. All opinions expressed and data provided herein are subject to change without notice. The services offered by us may not be suitable for all investors. The material is not intended to provide and should not be construed as providing individual financial, investment, tax, legal, and accounting advice. You should consult your professional advisors prior to acting on the basis of the information herein. For further information, please contact us at proelliottwave.com. We have updated our weekly newsletter for this week of the 10th, November 10th to the 16th. Actually, 3 out of these 4 charts are going to be covered in this video because they are the US Dow, S&P, and the gold. And we're also going to cover the US dollar index. Key economic events for this coming week. Take a look at Thursday. That's probably the key in the US market with Fed Chairman Bernanke speaking actually on Wednesday. And then Thursday you will have Yellen testifying and some unemployment claims coming out on Thursday as well. Okay, let's get started with the weekly Dow. As you can see and remember from our previous videos, this is a 1-2 of our 5th wave completion of the super grand cycle. And within this 5th wave, we have we're working on the 3rd wave right now. But off of that 3rd wave, we've completed a 1-2, and we're working on a 3-4 into a 5. Zooming in, that 3rd wave is being broken down as 1-2, 3-4, and into 5. So we're in the 3rd wave of the 3rd wave of the 3rd wave of the 5th wave. So here we go. Let's zoom in further and see what we are at in the past few days and weeks and months. Looking at the daily chart, you would see that we've made it interim 3 to the 4, and now we're in a bigger cycle of the 3rd wave, trying to complete a 4th. Whether this was completed with an ABC here, and this is the beginning of that bullish run to the 3rd of the 3rd, 5th of the 3rd. We'll have to wait and see, but for now, let's zoom in and see how we have this count figured out. It looks like we were in a triangle with the A forming here, somewhere around beginning of September, to a B to a C, and we're going to be, we had completed the D as far as we had counted, and we're in the midst of going down to get an E. However, beginning of this week, we had some corrective moves that were kind of taken out by today's action in the US market. So that was our A to a B to a C, and this was our D. Now whether this D was completed here or here, we would wait and have to see. We do have a count, but it's I don't see the clarity that I would like to see, um, where a D should have been a very prominent A, B, C sort of action, a triangulate and move to the D. So that's what kind of worries me in this count. However, the previous counts, as you can tell, they have not been very triangulated and defined as well. So we'll see how the action moves along in the next couple of weeks. But if we zoom into the hourly this past week, let's take a look at what we've done. It's been sort of sideways with a lot of up and down movements. A couple of days of bullish, couple of days of corrections, and here you saw a new high and then back right down. So we'll have to see how this pans out, but this could be an A, B, and further test of this high. If we do pass this high, I believe we're going to get a much more bullish run to the upside, because at these levels, this count is going to be no longer valid, and I believe that we would be into our fifth wave completion of the third. So in the next couple of days or weeks, keep your eyes out on this, as we're going to be updating the charts as we go along. Let's see if there's anything more we can see in the 15 minutes. And pretty much the same. We did have a clear breakdown of the A. I believe we're working on the B, whether this was formed here as the A, somewhere around here, and then come back to B to C of this B. We'll wait and see. Let's move on to the S&P. Okay, here we go for the S&P 500. We had ended our cycle in March 2009 for this low of 4, and we've been working on a 1, 2, and on the 1, 2 we did a 1, 2, 3, 4 somewhere around April of 2010, and we're working on the third wave as of now, very close to the completion of it as we waited for this chart to update. Okay, so the third wave is broken as follows. This was a 1, 2, and right now we're in the middle of the third wave, and the third wave is broken down into a 1, 2, 3, 4, coming close to a 5 here. What I believe what we have is an ending diagonal formation for the third. We'll zoom in closer, take a look at what is going on here, and from our third we have a 1, 2 ABC correction to a third. Therefore, that's why I believe unless we get a very bullish run here, this wave count is going to be valid. I believe we're going to break down and come and get a fourth before we go get a fifth. And that coincides with what we're seeing in the US Dow as we spoke. Both markets should correct down in the next couple of weeks. And at that point, we'll meet this trend line between our wave 2 and make our formation for the wave 4, which would be parallel to our waves 1 and 3, and we'll go out from there. Looking at the 4-hour, you'll see that for the ABC, we do have a very nice clean wave count. Here it gets kind of choppy, and I believe that's exactly the sentiment of the market. They don't know where we're going to be going very bullish here as start this third wave here, or whether we're going to go down and correct like the Dow to a 4 down here, and that's a good 100 and about 100 points, just about 100 points, I believe. So off of this action, I believe we should form. We're going sideways, and we're going to form an A, B, C down to here. I don't believe we're going to stop here with our C and move on down. Let's move to our gold market. And what you see here is, I believe this was the end of the fourth wave overall super cycle for the gold. And we're in the midst of starting the bullish run for the fifth wave. And that had started with impulse wave 1 correcting 2 right now. Whether this was our bottom of 2 with an ABC correction to 2, and this is a 1-2 going up, we'll have to wait and see. At 120 at 1251.78, this count would not be valid, and perhaps we're going to be counting or testing these lows to see whether we form it to finally before we get started, or this was not the end of the fourth wave and this was just a corrective for perhaps or an ABC correction off of this last corrective wave into the gold. Let's zoom in and take a look at this closer to see how we're forming the second wave. If you take a look at this, I believe this is a very important zone. About 40 points or so separates this count from a bearish count, and in the next, hopefully in the next couple of weeks, all of this is going to be further defined. And this count would also coincide with what we're talking about with the Dow and the S&P. I believe they will work hand in hand, and once the Dow and the S&P start falling, the gold will start moving up. Uh, and that's going to be played out within the next week or so. Okay, let's continue with the dollar index. Looking at the weekly chart, I believe that we have formed a 2 here from a high of in 2013. This is a 1-2. We're going to go further up, and the action for the 1-2, it's an ABC. Let's take a look at this even closer. With the B to the C, we had an ABC coming down, and that was broken down nicely. And at this point, we've broken this trend line to the upside. We've broken these lows and support or resistance points. So I believe we're on our way to go and move on further up. And if you look at it in the 4-hourly, you'll see that we're almost forming the fifth wave. The fifth wave of the 1 moving up. And we have a 1, 2, 3, 4, 5. This is all the action this week with all the rate cuts in the euro and the strengthening of the dollar index due to that. Coming into the hourly, you'll see a further breakdown. Again, you can see these charts on your own time to further dissect them and see how these are broken down. But this pretty much concludes our weekly outlook for the coming week. Be careful trading as we are at borderlines with all these currencies and markets, where the breakpoints are so close that with the pound, with the Japanese yen, euro yen, the Dow, S&P, gold, all of these are coming to a point where some decisions are going to be in the market, and I believe there's going to be massive movements for all of them coming up in the next couple of weeks. So good fortunes, and we'll see you in our trading rooms, and also look forward to bringing you more details as the week progresses. Thank you, and bye-bye.